Come one, come all, step right up. Everybody gather around. Come one, come all. Get your Omni Snake Oil on sale right here. Whether you're a trader who leaves his stops in for too long, doesn't know how to take profits, takes small profits and big losses, or doesn't like his mother-in-law, whatever it is you want to fix, the Omni Snake Oil will do it for you. Right here, traders, it'll grow hair on your head, it'll grow you a mustache if you please, but what it will do is make you a much better trader. So get your Omni Snake Oil, get it here while it lasts. $49.95 a bottle. But wait, if you act now, we'll double the size. We'll give you two, not one, but two bottles of snake oil. You can rub it on your friends who are traders. You can fix your whole trading style. Just 3 or 4 uses and you'll be the best trader on the planet. So remember, get the Omni Snake Oil while it lasts. And for you traders out there that actually believe in technical analysis, we don't bother with this nonsense. We don't have Omni Snake Oil. We don't wear silly hats. What we have is technical analysis, traders. The stuff I show you on this board every day. And I'll tell you what, the analysis is starting to shape up to this market just exploding. I'll tell you what, traders, in my weekend webinar, and you know what? Let me just say this to you. Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. This webinar is being filmed on November 15th, Sunday, and it's sort of a longer-term view on where we feel these markets will be going next. Traders, you know on the weekends I love to read the news. I read international newspapers. I read domestic newspapers. I read everything I can get my hands on. And I got to say, article after article all over the place. Let me just read some of this to you. Asia doing very, very well. Eurozone crawls out of a recession officially. The FTSE reaches its highest close for the year. U.S. doing much, much better in retail and manufacturing sectors. Profit outlooks improve in many, many U.S. companies. The list goes on and on. And I'll tell you, all I can say is that the slant in the newspapers this weekend was very bullish, traders. There are literally dozens of articles in the newspapers justifying an excellent retail sector coming up this fourth quarter. On top of that, Walmart, likely the largest purchaser of the world's product suppliers, has instituted a new program which will pay suppliers within 10 to 15 days of receipt of those supplies at their stores, as opposed to the 2 to 3 months which it took prior to this new program. So what they were doing was taking 60 to 90 days to pay the suppliers when they sent them their goods. Well, they've instituted that program which will now pay them in 10 to 15 days. This will help the entire retail and retail supplier sectors. The U.S. economy is a consumer-driven economy. The fourth quarter proves to be very interesting and exciting. This quarter should be very, very strong for the consumer, retailer, supplier sectors. Lately, this market has seen a switch from mainly stock, or I should say, this market has seen a switch from purchasing small stock, or, the tech stocks, to huge trading in the big cap stocks, which illustrates that this rally is broadening. It's another sign that this market wants to rally, and the rally will very likely continue. Now remember this, traders. The current price, and this is important, so listen to this. The current price of the stock market does not reflect the condition of the average household, nor the white/blue collar workers. However, it's a reflection of the profit streams of the largest, most wealthy companies on this planet. If they are getting better or getting healthier, so will their supporting staff. And remember this, most of these companies are now global. They're huge. They're all over the world, representing a shape, or I should say they're representing the shape of a majority of the world's industrialized countries' markets. So right off the bat, it's not just our market. The whole world is starting to do much better. No matter what the average individual thinks about their personal situation or their opinion of the economy and its future, the profit streams of these huge corporations that make up the world's stock markets are enough of a reason to support a continued rally. And I'll tell you what, I believe in these articles I've been reading because they are dead on from what I've seen. Another important insight, if the Chinese government goes ahead and lifts its peg from its renminbi, they will no longer have the need to sell US dollars and balance their books. Right now, they got to sell lots of US dollars to keep their peg, right? If they remove the peg, this event will likely spark the phase of the US market's recovery where the US dollar and stock markets both rise concurrently. I have mentioned this phase many, many times to my Omniacs, both at the Trading Academy as well as in many of these videos. And I fully expect this phase to play out as this recovery plods ahead. The phase I'm talking about is this. US dollars and the stock market rising together. You will see that before this recovery is complete. The most interesting fact I have stumbled upon during my studies over this weekend is this. Many times in these videos I've recommended, and you have all heard me say this many times, I've recommended that you exit your positions by the close so when you do your nightly analysis, your opinion will be clear and unbiased by your existing positions, right? You've all heard me say that. Everyone's heard me say, listen, get out by the close so when you do your homework at night, you're not biased and your decisions don't get altered. Imagine this. Luckily, as I studied this weekend, I stumbled upon an article in the Wall Street Journal which unequivocally confirms this strategy and the belief that if you have a position, it will alter your analysis. Listen to this. This phenomenon has a clinical name, and its name is confirmation bias. Confirmation bias in its simplest form states that people are twice as likely to seek analysis which confirms what they already believe than they are willing to acknowledge the evidence that would challenge those beliefs. Now get that, traders. Clinically, it's proven that if you already have a position on and you do your homework, it will absolutely bias your opinion. This clearly means that your existing positions are very likely to influence the way you view your nightly analysis or homework. So be wise. Do not allow human nature or confirmation bias to alter the results of your studies. We are day traders. Conduct yourselves as such. Now, on to the markets, baby. Traders, from what I have seen in the analysis I've done, my Omni proprietary average, the indices clearly are back above the Omni proprietary moving average on the weekly charts. The Dow Jones Transportation Average, the leader, back above. NASDAQ stayed above. S&P now above. I got some charts I want to show you which should help you agree with those articles and agree that, yes, we are going back into the bull phase. Traders, with no further ado, let's go to the charts. Okay, traders, what we are looking at is the Dow Jones Transportation Average weekly bar chart. Each one of these lines represents a week's worth of trading. If you remember the weekend webinar I did for you when we broke below this, it's a dangerous time because last time we got below my average, it was a big spill, right? Well, we got below. I did a video and said, hey, maybe there's a pause coming in the upside. Once we're below that average, I am forced to sell rallies. Well, I'm glad to say we are back above the average in the leader of the indices, the transportation average. Again, back above the Omni average, and go transportation. That's what I wanted to see. But there's more. Let's look. Okay, traders, once again, we are looking at the Dow Jones Transportation Average, but this is now a monthly bar chart where each one of these green lines represents a whole month's worth of trading. As you can see clearly, you do not get below the Omni average very often. When we did last week or 2 weeks ago, I said, oh no, I don't like that this monthly bar is down there. It's settled lower. Lo and behold, what happened before the month was out this month? Right back above. Thank you very much. So now, very strong charts here, the weekly and the monthly in the leader, the transportation average, back above the Omni proprietary, and that, my friends, is bullish. I have more charts here, so let's take a look. Okay, traders, stepping back to a weekly chart again, we are now looking at the Dow Jones Industrial Average weekly bar chart. We are back above the Omni average, and it gapped open, and it's all the way up here. Very, very smart. This is looking very nice on the weekly, and we managed to hold a very important weekly trend line and stayed above the Omni average or back above it. And boy, oh boy, traders, once again, very bullish. So you see the weekly and monthly charts are absolutely calling for much higher now that we've gotten above. But let's look. There's more charts here. Okay, traders, now another one of the leaders, the NASDAQ weekly bar chart. NASDAQ never bothered even getting under the Omni proprietary on a weekly, but what it did do, which is very impressive, is it took out this major resistance line. have blasted above, and it's now above the 200 bar moving average. And look at this thing just starting to go. It's here right now this evening as I do this video. And traders, that looks pretty strong. Now, I will say this, as we go through these charts, you'll see some dailies, and the technical indicators on the daily charts are not calling for an update for Monday, but the formations are. And formations do take precedence over indicators. So when we get to the dailies, you'll see what I mean. But look at how beautiful the weeklies are facing the upside. Let's look at a couple of more charts here. Okay, traders, now the S&P Cash weekly bar chart. Back above the Omni Proprietary. Yeah, baby, that's the one we trade every day, right? We're back above the Omni Proprietary, and once again, managed to hold on to a major weekly support line. We are trading right here, traders, a gap opening Sunday this evening. We gapped open higher, and off to the races it looks like we are going to go. So you've seen the weekly charts, you've seen a monthly chart of the transportation average. Now I'm going to break this down to the daily charts, the ones that we use to get in and out on a day trading basis. Okay, traders, we are looking at the S&P E-mini daily bar chart. Now we are looking at a daily. Clearly, we've stayed inside of this wonderful parallel channel, and each time it gets down there, it holds well. Well, it's popped up, and look at that bull flag right there. It's created a bull flag. Yes, it has bearish indicators for day trading on Monday, but that bull flag, we're just about out of the top of it tonight as I speak. We stay above it, and we will be buying the dip tomorrow, taking this formation over the bearish looking indicators. In fact, the indicators aren't completely bearish, they're confused right now. And when I see indicators that are confused, I look for a formation. A bull flag is certainly a formation I would like to be buying from. So that is the daily ES, traders, and let's look at one more chart here. Okay, traders, another one of the leaders is the Russell 2000. This is a daily bar, and look, we held the Omni average way back in July, have maintained above it, but we did get under it a few days back, and it got a little scary, you know, when I did that video, and I told everybody, look, we're under the Omni average, caution here. Well, we're well back above it, and we've created a bull flag right here, and tonight, as we do this video, we're sitting above the bull flag, another bullish indication that this market does want to go higher. So I'm a firm believer in weekly and monthly charts, and I certainly like to see bull flags on the dailies. We have seen everything we're looking for. We are once again buying dips in this environment, and we will certainly be gearing our Omni trades towards the upside once again. All right, traders, pull your charts, pull your weeklies, your monthlies, pull your dailies, take a look at this situation. Make sure that your analysis agrees with mine before considering taking a long trade. So, traders, you've seen those charts. Hey, baby, back above the Omni Proprietary. Yeah. This is what I was hoping to see. And the favorite thing about this weekend webinar is this. I get to add something back on my board. Don't fall in love with the downside, baby. Here we go once again. And I hope I get to keep this on the board for a long time. Do not fall in love with the downside. If this thing dips, you find a strategy to get yourselves long, because that's what we see. That's what getting back above the Omni Proprietary Moving Average means to us, and that's how we like to trade. We use technical setups to point us in the direction on a longer term. Then we break it down to a daily, and we use our indicators and our formations to see what to do on a short term. Traders, take my word for it, this thing's getting stronger. Unless, of course, somehow everything turns and goes back down below the Omni average, we are buyers of dips, and I'm glad to say that. Again, do your homework. Make sure you agree with this strategy. But after reading the newspapers and disseminating the information, then looking at my analysis, this market's a buyer of dips for the rest of this year. And we got the Santa Claus rally coming, right? Everybody get a round of applause for that if it comes our way. Every year we get that pop of the Holly rally right into December. Let's hope we get one this year. I think it's coming. Okay, traders, if you like this video, we have, how many, Mikey?
515.
515 more videos, a lot like this one, with plenty of information for you to learn from. So come on down to our site. If you want to find out how to subscribe to these videos on YouTube, simply go to www.youtube.com/Futures Analysts and subscribe to our videos. We also have a site where we have rooms that are open every day, rooms that are open to the public, and you can jump in those chat rooms where we can teach you our brand of analysis and help point you in the proper direction. You can simply come on down to www.livewithoscar.com and jump into our chat rooms. It's free, so come on down. All right, traders, that's about it. I want to go do more analysis and find a good place to get myself long this S&P. So give me a call anytime day or night, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do is say this to yourselves over and over again, and you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.